What's going on, guys? It's Cory, real estate guy, and you often hear me talking about Fannie Mae and Freddie Mac. And to the average person, you have no idea what that means, and you may not even care about what that means. You just want to know, can I get approved for a loan? But let me give you a little bit of insight, okay? When you think about all of the restrictions that you have to do in order to qualify for a lender for specific loans, okay? Specifically, FHA products, the Federal Housing Administration, and Freddie Mac loans, okay? They have so many different programs, so many different things that they do for the housing market to make it affordable for multifamily living, for single family living, for all kind of different things, for homes and home loans, and for the investors that buy these loans, okay? These two entities are what you call enterprises ran by the government in order to make just housing decisions and more affordable housing for people here in America, and also just to be a part of the housing market and to boost it with selling these loans or securities off to these investors. Okay, that's what the secondary market does. Okay, so there are lenders. Not every lender is a part of Fannie Mae or Freddie Mac. Remember, they're two different entities. They have their underwriting rules, which they have to follow, these lenders. So all lenders have to get approved to have the product. And what they do is they have all these restrictions that when I talk about these different type of loans that the Fannie Mae or Freddie Mac will buy in packages from them. So a loan is, say for instance, a lender has a bank and they have a surplus of money. Say they have, let's just say $1 million. With that $1 million, they're able to do so many loans based off that dollar amount. So if they have 5 loans out at $100,000, then they have $500,000 that they can use to buy loans. What they do is they will follow these guidelines written by Fannie Mae or Freddie Mac, who don't necessarily do that. They do not approve loans. You can't go to Freddie Mac or Fannie Mae to buy a loan. You have to go to a sponsored lender. And what that sponsored lender does with that same $1 million, they may write those 5 loans for $100,000. What they're going to do is they're going to write it to a way that it can be sold to the market, to the secondary market. And that is why you have so many different type of restrictions. That's why they are so in depth when it comes to what's going on with your financial portfolio. Is this house affordable for you? Do you have a risk, a high risk or low risk? How do we set your interest rate? Can we do this loan for you, or do we have to look for another package or another source for you to buy a loan? So they kind of run the show in terms of what you can and cannot buy, because lenders have a specific set of guidelines in order to sell it off so they can free up that $500,000 so they can continue doing loans. And that is how a lot of banks work in terms of the mortgage industry. So a little bit of history or a little bit of knowledge of Fannie and Freddie Mac. Fannie Mae was the first one, 1938. It's governed by the FHA, which is the Federal Housing Administration. Both of these entities focus in the single family market, the multifamily market. Okay, and when I say multifamily, 1 to 4 units is considered residential. 5 units or above is all commercial, and then affordable housing. They create guidelines for the approved lenders, sell pool securities to investors, and they follow the FHFA loan limits, which is the different loan limits that you have in various locations around where you stay, how much they're going to loan you in a maximum without you having to pay a down payment for some of these guaranteed loans. So it's Cory, real estate guy. We talk about Fannie Mae and Freddie Mac, what they are, what they support, and what they do.